Here are the crypto top headlines covered in this video. Bitcoin open interest exceeds $40 billion amid brush near $70,000. Next, Coinbase files FOIAs against U.S. regulators probing banks' crypto crackdown. Also, TechCrunch founder says Stripe has acquired Bridge for $1.1 billion. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Bitcoin open interest exceeds $40 billion amid brush near $70,000. High open interest signals more leverage, which could induce another flush out if positions are liquidated. Open interest on Bitcoin derivatives reached a record high on October 21st as BTC came close to breaching the $70,000 price point. In a post on X on October 21st, CoinGlass reported that open interest, or OI, on Bitcoin futures contracts had reached a record high of $40.5 billion. Open interest is the value or number of outstanding futures contracts that have yet to expire. It measures the amount of money invested in Bitcoin derivatives at any given time, with higher OI indicating potentially more leverage and volatility in the system. The Chicago Mercantile Exchange, or CME, had the lion's share of the OI with 30.7%, followed by Binance with 20.4%, then Bybit with 15%. During times of high OI, if prices move sharply, it can trigger cascading liquidations, which can force selling in the spot market in flushouts that result in sharp BTC price dumps. The last such flushout occurred in early August when BTC prices dropped almost 20%, or around $12,000, in less than 2 days, falling below $50,000. The asset is flying high, reaching $69,380 in early trading on October 21st, according to TradingView. However, it was rejected at resistance and had pulled back to trade at $69,033 at the time of publication. According to CoinGecko, the asset is just 6.4% below its all-time high of $73,738. On October 20th, Cointelegraph reported that if Bitcoin rallies above $70,000, it might supercharge altcoins such as Ether and Solana. Both assets are currently outperforming BTC in terms of daily gains, with Ether gaining 3.5% to top $2,750, while Solana made 6% on the day, coming just shy of $170 during early trading on October 21st. Still, both assets have pulled back slightly since. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Coinbase files FOIAs against U.S. regulators probing banks' crypto crackdown. The exchange asked regulators to disclose documents relating to an ongoing crackdown on crypto companies among U.S. banks. Coinbase has filed 2 Freedom of Information Act, or FOIA, requests against United States regulators, demanding they disclose, among other things, information about the ongoing cryptocurrency crackdown among U.S. banks, according to Paul Grewal, Coinbase's chief legal officer. The Federal Deposit Insurance Corporation, or FDIC, the U.S. agency insuring bank deposits, has reportedly asked banks to cap deposits from crypto companies at 15% of total deposits. We filed 2 new sets of FOIA requests in our continued effort to get any sort of clarity on how regulatory agencies are approaching digital assets, Grewal said in an October 21st post on the X platform. The first is for documents about a digital asset deposit cap by the FDIC, and other banking regulators have been imposing on financial institutions, Grewal said. Coinbase filed a second FOIA request to learn more about how regulators responded to other crypto-related FOIAs in the past, he added. The FDIC purportedly imposed the deposit caps without first soliciting public comment, which is generally a requirement for banking regulators under U.S. law. Each FOIA request is separate from our FOIA filings from over a year ago that are now the subject of federal lawsuits, Grewal said. In June, Coinbase filed lawsuits against the U.S. Securities and Exchange Commission and the FDIC for allegedly refusing to comply with previous requests for public disclosures. In 2023, Coinbase asked the SEC to divulge documents relating to the agency's classification of Ether. The SEC filed charges against Coinbase in 2023 for allegedly violating securities laws with its ETH staking as a service offering. Spot ETH is classified as a commodity by U.S. regulators, but the regulatory status of ETH staking pools is uncertain. Coinbase also sent FOIAs to the FDIC demanding information about pause letters the agency purportedly sent to banks, demanding they slow down the growth of crypto-related banking activities. Stand with Crypto, Coinbase's project advocating for common sense digital asset regulation, launched a Political Action Committee, or PAC, in March to support pro-crypto candidates. The November U.S. presidential election pits Republican nominee Donald Trump, who has said he wants to make America the crypto capital of the world, against Democrat Kamala Harris, who has been comparatively quiet on the industry. United States Vice President Harris is friendlier toward crypto than her boss, President Joe Biden, but not as pro-industry as rival and former President Trump, Galaxy Research said on October 14th. Our next top headline, TechCrunch founder says Stripe has acquired Bridge for $1.1 billion. The deal would mark one of crypto's largest acquisitions, though neither company has publicly confirmed the deal. Payment processing giant Stripe has acquired stablecoin platform Bridge in a $1.1 billion deal, according to TechCrunch founder Michael Arrington. According to reports on October 17th, the deal was in advanced stages, though representatives from both organizations had yet to address the reports. This deal is done, $1.1 billion, Arrington wrote in an October 20th X post. Arrington did not elaborate. The acquisition would be the largest for Stripe, which is based in San Francisco and Dublin, and was valued at $70 billion in July. It would also be one of the biggest acquisitions in crypto history. Bridge did not immediately respond to a request for comment. Stripe responded to Cointelegraph but did not provide a statement on record. Stripe is a payment processing platform that allows businesses to accept credit and debit cards or other payments online. In March, it reported passing the $1 trillion milestone for total payment volume in 2023, with the output of businesses using Stripe amounting to about 1% of global gross domestic product, or GDP. The reported deal comes just 6 months after its co-founder John Collison announced the company would begin supporting global stablecoin payments this summer. It also comes less than 2 weeks after Stripe introduced stablecoin payments on its main payments user interface by integrating Circle USD or USDC stablecoin. Bridge is a stablecoin-based payments network founded in 2022 by two former Coinbase executives, Zach Abrams and Sean Yu, to compete with the Swift network and credit cards. Abrams was the head of consumer at Coinbase and founded Evenly, a P2P payments company that Square eventually acquired. Yu held engineering roles at Coinbase, Square, DoorDash, and Airbnb. Bridge allows businesses to create, store, send, and accept stablecoins, which some have referred to as the Web3 answer to Stripe. This year, the firm received $58 million in funding from Sequoia, Ribbit, Index, and other investors. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.